Hi, my name is Shane Williams. I'm President and CEO of West Red Lake Gold Mine.
Shane, good to see you. You got a bit of good news out in the market today. You're doing things that most people would love to be able to say. Go on, give us the headline.
Yeah, so we entered commercial production in January 1st. And so look, this is a big milestone for the company. You know, most developers, as you say, in most early stage production, that's what they want. Early explorers, that's where they want to go. And we're there now. So yeah, I'm very pleased with the team, the work we've done. It's been a long slog for sure, but we've had a good team. We've got where we want to go, and it's exciting. It's exciting news.
So how do you define commercial production? I mean, how many consecutive days do you need to do it, and at what sorts of levels?
So usually it's between whatever the throughput is of the project or the mine or the operation. It's around that 60 to 70% consistency over a probably 2 month sort of a period, and also it's operational stability. You can't go 1 month and then say, hey, we're in commercial production, and then drop down the last month. It's that sustained ramp up or that consistency plus over a period of time that 60 to 65% of production.
Of permitted throughput. That's what
we're permitted or design throughput or design
throughput.
Yeah.
Okay. So give us that. What were you doing in December, and what did you kind of move to in January?
Yeah. So the design throughput the permanent throughput is around 800 tons a day. That 800 tons a day. So 60 to 65% of that is roughly around 550 to 600 tons a day consistently. So
right.
Over the quarter of last quarter, we consistently were above that 500 tons a day. And as we moved into November and December, we were above that 600 tons a day. So, we've seen that consistent ramp up now. And that gives me confidence that both the mine and the mill, not just the mill, the mine is ramping up, is getting their systems in place. And so both of those together with a good recovery and an operational stability are usually the triggers for that commercial production.
Yeah, I mean, the release talked about being at 86% of permanent capacity in December, but as you say, it's also that kind of operational stability that you're looking to. And how long typically do you need to kind of see that side of things in place for?
Well, normally it's 30 days. Consistent, but that's normally a trigger. But look, with Madsen, I wanted to see a bit longer. I wanted to see that 2 months sort of timeline, particularly underground. Some of the big open pits, they get into production, they have that 30-day sustainable rate. But underground, we wanted to see a little bit longer and a little bit more stability. Obviously, the history of this asset, we wanted to see that kind of stability, and more importantly, Matthew, the ramp up. As we went in, we started the mill in July, and we've seen a steady ramp up every month on month, tonnage coming more, grade ramping up, mill processing ramped up, and that's very important for stability, operational stability.
So that kind of learning curve you went through in terms of the sequencing and then development, how much more optimization do you think you can do in the rest of Q1? How much would you like to see?
So I would like to see probably by the end of Q1 another step up close to that 800, and probably by Q2 we should be around that 800 sort of number. It's kind of the more important thing now is the consistency, getting the drilling, getting the design ahead of yourself, getting the drilling, and we've been doing that to now, but it's at a much higher sustained rate.
And obviously a lot of this is going to be down to the ore, the grade that you're putting through, the type of ore that you're putting through, and as well as the kind of broader mine improvements that, as you say, so a lot of people kind of delivered this number for you, as it were. So what ore were you actually feeding through?
So basically, towards the end of this year, we were bringing through an area called Austin, and from a number of different areas. It was a little bit lower grade than we're expected to go to. Obviously, the other thing about commissioning or ramp up, Matthew, is things can go wrong. You can have up and down. You're tweaking, and you don't want to be putting your best grade through your mill, because if something happens, you've kind of lost your best grade. So you kind of use lower grade material, some stockpile, some grade to build it up and get it done. And then you bring in your best grade, which the plan is for Q1 to get into this 4447 area. We've been really drilling that over the back half of 2025. And that's this higher grade zone that we've been talking about. And that's transitioning into that higher grade. So we will see grades pick up in Q1.
Right, and in terms of, have you got some installed redundancy in the mill as it is today?
Yeah, the mill can go to 1,000 tons a day.
Okay, so there is.
And actually, in December, we did see a couple of days of 1,000 tons a day, In December, we saw a couple of days peak at 8 or 9 gram material coming through the mill. So there was a lot of positives. We did one stope out of this 4447 area, and we got 9 grams going through the mill. So it does open the potential of getting higher grade in Q1.
Okay, and so ramp up phase nearly complete, and you're going to declare full steady state when?
Probably Q2.
Okay.
Q2 would be
okay.
good.
That's fair. Yeah. That's fair. In terms of December, obviously the head grade was sort of, I think, just under five grams, yeah. Right? But you cite obviously just then, you're going to hit us nearly 9 grams per ton. I mean, can you just talk about that? Was that just a question of just testing various ore feed, or what happened?
Yeah. So it's about testing the different zones. We have a number of different zones as we've probably laid out before, and it's about testing all those zones to make sure recovery is good on them, to make sure everything runs through the mill. So we were testing, in that phase you're kind of testing different ore zones as you go.
Right, but you've given guidance, I think, of around, you're trying to hit 6 grams per ton, right? So
Yeah. We haven't actually given guidance, but I suspect as we come into Q1, the grade will ramp up and we'll get that much higher grade material as we go, because now we have a stability in the mill and processing, etc., etc.
Right, and obviously, I guess part of this in terms of reconciliation against your model, the kind of resource model grade, mine grade, mill head grade, is it sort of where you expect it to be?
Yeah, and there's some of that on our website. We've had it just in December there when I was there last week. We wanted to get into that, and the team prepared an excellent presentation that showed all the stopes and areas we've mined today is spot on with the resource model that we put in, the new updated resource model. And that really shows the value of all the drilling we've done, in that reconciliation is something that's very, very clear now. We have reconciliation on the model and the
right, and obviously the met work on Austin. So you understand that a bit more. We
understand that a bit more.
Are there kind of further risks remaining sort of beyond Austin, South Austin?
Not really. We've kind of mined now in this ramp up phase all different zones. We wanted to get through the mill, wanted to get each area understood. We've kind of gone through that. So we are focused on in Q1, we have this 4447 area. And actually it's quite exciting. We've kind of opened up or discovered a new area at the bottom of Austin. We've known about it, but we're just beginning to get in there. And that's kind of an analogy to 4447. So I expect in the back half of the year, the same sort of higher grades. So, we're now beginning to discover within these deposits, the kind of like jewelry box sort of areas within the deposit. And we've got into one, and we're just about to get into another one from our drilling perspective. So that's quite exciting now.
But there's any kind of grade volatility around that if you're talking about this jewelry box?
Yeah, there is. Yeah, like I said, the average grade is probably 5 grams sort of the deposit. And as you get into these areas, you'll get a quarter here and there of this 7 to 8 grams, 6, 7, 8 grams sort of area. So there is that variety. There is that sort of variability in grade, for sure.
Right. Okay, so just so people understand it, so gold's been poured, and how much? Because I'm sure we're getting how much has been poured, how much is still in the circuit, when do you actually start sort of monetizing this? Well,
we have been monetizing all year. We've poured 20,000 ounces this year, and so generated around $73 million of last year in cash flow. So, as we move forward this year, that will obviously ramp up. We get in the gold market today. So we are actually in free cash flow. We are producing. we are a producer effectively as of today.
Right. Okay. It's official. In terms of you mentioned like 747, but also things like areas like Fork and 904, etc. You kind of move through the kind of from definition drilling into mining quite relatively quickly. What did you kind of learn through that process, and what kind of enabled that kind of speed of turnaround?
Well, actually, you said quite quickly, but investors want it quicker. You know, as we're producing. Yeah. As we're producing the drill results, we've had some spectacular drill results from 447, and everybody's anxious, when is that going to come through the mill? It usually takes 5 to 6 months by the time you drill an area, you do the design on that area, and you put it into the mine plan. So, you know, all the work we did in the second half of last year, as we get into Q1, that's where we're going to see the value. And as we're drilling that other area now, as the back half of the year, we'll see it. So there's that timing. We have seen that there's a process that we do. If we follow that process clearly, if we go underground, we drill to that tight spacing, that 6 to 7 meters, we take our time well ahead of the mining and development, and then we translate that through, do the design into the mining. We find if we follow that process, we get the reconciliation.
And so for areas like Fork and 904, in terms of the kind of geological similarities, the drilling densities, etc., do you expect something similar to 447?
Yeah, in some of these areas, I do expect the more work we do on it. You know, these are high grade, narrow vein mines, so you need to drill them very tightly spaced. You need to do the work. You need to understand them before you're close to the mining of them, and you need a long time to interpret that. Do your drilling. Sometimes you have to go back twice to drill them through. But when you do that, you will uncover these areas.
Okay, and for you, obviously, so I'm labouring on 447, Fork and 904, but at some point, you know, the mine plan will need some, I guess, flexibility built in to kind of swap between those zones as the grades evolve, right?
And yeah, exactly. That's exactly. The more drilling you have ahead of yourself, the more inventory, the more design. And so these sort of model is, you've high grade pockets, and then you've lower grade areas, and you're blending those areas to bring an overall blend to the mine. You know, so you want 3 or 4 different, we call them complexes working together, mine complexes working together, and you're blending those with some higher grade pockets all working together.
And how does that kind of like getting after these high grade pocket strategy affect things like, I get the kind of the near-term margins, and obviously that's smart at this stage, but does it affect long-term life of mine?
No, it doesn't really, because one of the keys of Madsen in particular is, in the upper part of the mine, it has been mined quite a lot. There's been a couple of groups who've gone through I would say, and picked the bones out of it, as I would say. You know, a couple of groups who went through, they never got very deep in the mine. You know, they never managed to get that deep. We're now getting down to that below 600, 800 meter depth. And as we're finding there's less of this remnant mining. There's more of the higher grade material left. And that's where we're beginning to see it opening out much better than in the earlier stage of the mine. So I do expect, as we advance, we'll find more of these high grade untouched areas.
Right, okay. Now, I think I know the answer to this one, but it's ask you anyway. In terms of, you know, how do we interpret, you know, 30 million bucks generated in Q4 versus the kind of steady state expectations? It's a great positive gold environment at the moment. Like I said, investors always want more. Do you?
I always want more. Matthew as well. What we're looking at now, obviously, the ramp up. It's just a great time to be a gold producer. You know, as I saw today, gold is nearly up at an all-time record again. It's jumping every day. So, you know, it's kind of perfect as we ramp up. You know, the gold price is rising. In a ramp-up situation, you want a bit of headway. You want a bit of tailwinds with you. And so it's perfect for the gold price rising as we get into our stride. So that's perfect over the next three to 6 months as we ramp up.
Okay, and obviously you've built yourself up a little cash reserve. Was it whatever, 45, 46 million, that sort of level? Are you kind of self-sufficient now? Can we expect any more capex or any other kind of burn on the balance sheet?
No, we're self-sufficient now. We're generating cash every month. Month on month, we're generating cash. So that cash will be built up over the rest of this year now. So we don't expect any more need for cash now. It's just self-generating.
Right, but at what point do you get to making money rather than sustaining capital or anything else that kind of eats through the cash, like expiration?
Well, we are making money from a West Red Leg point of view. We are making money today. Today we are generating cash and free cash flow and making money.
Okay. Right, I could grill you a lot more on the money side of things, but I think the only thing that I think is really, really important now is you pick this asset up for a steal. Where others faltered, you were able to kind of walk in and pick this up for a steal. You've got gold at 4,650, I think, today. The margins are there. You haven't had this massive capital outlay initially. You picked up the infrastructure as part of the deal. People are still going to doubt you. People are going to still go, this is ultimately, this is Madsen, this is pure gold. What's different? What have you done different in terms of that setup? What does the current financial market do for you?
Well, the gold prices, as I said, is a key tailwind for Madsen. The previous operator, Pure Gold, they had to have an average gold production rate of around 4,000 ounces to break even. We have the luxury of the gold prices double what it was at this stage. That gives you a lot of leeway. It gives you the time to ramp up. So, 2,000, 2,500 ounces a month is paying all the bills at Madsen. So you can see that sort of a margin on production level of where we're getting to,
And is the answer to this the amount of drilling that you did, the density of the drilling that you did?
From a technical perspective, it is the amount of drilling. Like the majority of the money that we've raised, and so, now 80% of that has gone into drilling underground and understanding the model. We've drilled over 200,000 meters of drilling underground. And 2 drills will continue underground life of mine on this deposit. The key is the process, getting as I would say, the model right, where you have this drilling well ahead of yourself. You understand the ore body, you turn that into mine design, and then you put it into the mine plan. And that sequence needs to be 6 to 8 months ahead of yourself to give you that time.
Okay, 2026, what are the big things? What are the kind of like non-negotiable things that need to happen in the company for you to be able to turn around in 2027 and say, I told you so?
So really that sustained quarterly ramp up now in Q1 and Q2. And then being able to announce in Q2 sort of thing, we're at the full run rate, and we're generating a lot of cash. We're putting that cash in, and we're growing the business effectively. That's where my plan is for the first half of 2026.
But tell me operationally, what does that actually look like? I get the monthly, quarterly targets, but what does that actually look like for you and your team operationally on the ground? What do you got to do?
So 800 tons a day through that mill consistently, every day in, day out, 800 tons a day consistently through the mill. At that average grade of 6 to 6.5, maybe more grams, with on top of that, some sweeteners feeding in to bring the overall average grade up to that higher grade.
Shane, good man, you got here. Keep doing it. Execution is what people are looking for 2026. Stay in touch and listen to how you get on, okay?
Excellent. Thank you very much, Matthew. Thank you.